income, or being in an unfortunate accident that impairs your ability to secure your family financially. However, it has also brought to light one of the most crucial life lessons: the need for financial security and complete protection, and why it has become even more important more than ever before. Through this webinar, our panel of experts will aim to educate our audiences on the importance of selecting an all inclusive insurance plan to safeguard their family's finances and highlight the core benefits of doing so as well. To further entrench the importance and need for an all in one insurance plan, I'm joined by an eminent panel of experts today. Joining in is Mr. Joydeep Roy, partner, PwC Global Health Insurance Practice Leader and India Insurance Practice Leader. We also have with us Supriya Rathi, whole-time director and principal officer, Anand Rathi Insurance Brokers Private Limited, and Mr. Samit Upadhyay, chief financial officer and head of products, Tata AIA Life Insurance. Thank you very much, panelists, for taking out time for this very important discussion today. And over the next 1 hour, our focus will be on exploring how uncertain times have changed people's perspective on insurance. We will also discuss the key benefits of having a comprehensive plan. The audiences will also benefit from your expert views on the need for a health cover and critical riders, and we will discuss the advantages of longer cover with the life expectancy also benefits as well. And without much further ado, let me begin by asking Mr. Samit Upadhyay first. So what are your top 3 consumer concerns that probably you've witnessed and observed with respect to insurance during this COVID-19 pandemic?
Thank you, Sakshi. So the top 3 concerns that we as a company saw was consumers wanting to know if they are eligible for a term cover and what kind of eligibility do they have. Most term plans, most protection plans come with the need for an underwriting and a medical underwriting. So that was the second concern, that how in the times of pandemic, how will I sort of go and get the medicals done? And finally, the other concern was in terms of due to the financial stress, the flexibility in sort of payment terms on insurance. So those were the 3 top concerns.
Right. Supriya Rathi, let me come to you. Would you like to add to that any of the concerns that you particularly witnessed?
Yes, so I think for our part, there was a general anxiety, especially with respect to the rising health costs, particularly if you contracted COVID. So how would consumers be able to get those reimbursed? How would their capital needs for that amount be met? That was one concern. So spiraling health and what would be covered, because there's a lot of ancillary costs related to COVID hospitalizations and even at-home care. So how would that be taken care of? And then obviously anxiety about jobs, which then translated into affordability and, like Samit said, how would they be able to take care of their previous encumbrances that they have made in terms of annual payments or renewals, etc. So, and then of course, an increased interest. And interestingly, we saw a lot of increased interest amongst the youth and the younger people wanting to take both health cover as well as life cover.
Right, that's true. Mr. Roy, I'll come to you next. Would you agree with both the other panelists as well? And do you think these were the big concerns that most of the people did feel at this point in time during the pandemic? And how is the industry really approaching these kind of concerns? How are you alleviating such concerns that are coming to you guys?
So Sakshi, from the vantage point of being outside the industry and looking at the industry, I think I fully agree. These are the problems which were developing in people's mind. See, none of these issues or anxieties happened overnight. They started happening over a period of time with incidents, events, and people having their life events like loss of job or loss of pay. So as you heard from Supriya and Samit, there are 2 more things which happened. So people started wondering how in a lockdown situation insurance companies will deal with them, because they were always used to dealing up close and personal, because they're agents coming and sitting with them, or they're going to a bank or they were being serviced when there were multiple people calling up, and all they heard was there's a lockdown. So in case of a claim, in case of a service request, or even when they were midst of buying, remember it happened in March. The lockdown happened 24th of March.
Right.
24th of March till 31st of March, 30% of the business gets logged in of the whole industry. So the natural thing was that what am I going to do? Is it going to work? So one great thing happened is that most of the insurance companies managed to work offline, and India having moved over to a lot of digital tools already, that helped. So the
Right.
industry struggled, but managed to really pick up the pieces of what was important that time was to service and manage claims remotely and deal with the clients and the distribution remotely. So that was something which the anxiety went up very high up and then got allayed as time went off, and they figured out the insurance companies doing well. The one other worry which gets which is developing now, and which is developed in the last 2 3 months, as the true nature of COVID infections are being understood, and that worry is coming both sometimes in the customer mind, but mostly in the insurance company's mind. See, it is now amply clear that COVID is an illness which does not only keep you, it does not only hospitalize you for that illness, but it can damage many of your other organs or make you impaired as an impaired life without you knowing much about it, or without even tests really coming out. So the question of medical underwriting, how is it going to be done for people who have been affected with COVID but not felt any symptoms, is a question which is right now hanging, still left hanging.
Absolutely. So that is a question that will remain hanging for some more time as well. And with kind of research that we are getting, that how most of the people might have been escaped during the tests as well, and might have been infected, must have developed antibodies. With researchers pointing out how 60% of the population probably would have already got infected, having antibodies. So how the future policies will also develop is something that we will definitely have to focus on in the future as well. I'll come to you, Samit, next. I want to understand from you, in what ways have you also noticed consumer behavior and perceptions about life insurance really changing since the pandemic?
Sure. So as highlighted by Supriya and Joydeep, there was an inherent anxiety and a greater appreciation towards protection covers. So the awareness and the need for protection was quite alleviated. That was pretty evident even in the search trends, if you saw during that period. So that gave rise to the product mix shifting for us from predominantly savings to a high protection this thing. Secondly, in terms of servicing aspects, again, as Joydeep said, there were anxiety that whether they will be able to, historically, who have been reliant on a face-to-face type of or a physical interaction, how will they proceed with their insurance coverage in a digital world? So there was this expectation that their need should continue to be addressed through digital mediums. Digital, which was sort of aiding erstwhile to sales, now became a medium of sales. I mean, sales started happening using digital. So basically, this accelerated the whole digital adoption for the industry. I mean, we were on our journey to sort of be more and more digital, but then COVID sort of accelerated the journey.
Okay, Samit, I wanted to come to you next, and I wanted to understand from you, if you could expound upon what are the advantages of a comprehensive life insurance plan, and if you have any of those plans at your company, so that viewers can understand better from it.
Sure. So as we discussed, having a comprehensive plan covers the both the responsibility as well as the risk dimension quite comprehensively, and with the ability to sort of have packages of covers that cover varied risks and at levels which basically cover responsibility. And not only this, comprehensive plans like Param Rakshak and Param Rakshak Plus of Tata AIA not only package two historical sweethearts of consumers as far as life insurance goes. One is basically related to equity linked savings as well as protection. So this solution packages both the historical preferences of these consumers, and not only packages the preferences but also enables the company to deliver a unique solution.
Absolutely. Supriya would like to add to that also how Mr. Roy also pointed out earlier that, people were worried as to how will the relationship work from here on, since everybody is locked in, especially in an industry which was, dealt with in a face-to-face manner. So how the digital adoption really worked for you at your company during this time, or the enhanced digital adoption, I would say. Digital obviously was there even before, but how did the customer's perception really change during this time?
Yeah, so you're right. I mean, like Samit said, rather than becoming, just a tool, it became an enabler. Right from the pre-policy and pre-placement stage, right up to claim settlement, and the companies that have adopted and embraced that technology to be able to give that end-to-end servicing, obviously have seen good quality growth. Having said that, of course, the learning curve became so much more steeper because that was the need, and there was just no choice. There was no looking back because we've pretty much been at working from home right from end of March right up to now, and insurers really the entire industry has risen up to equip themselves digitally. And that was the need of the hour, because while the anxiety was spreading and there was people, one wanted to connect with their insurers and clarify that their existing term insurance covers would cover any eventuality from COVID, or they had so many other anxieties and questions. So for the insurer to then come up to that digital platform and to be able to service right became very, very important, because trust is really how the industry survives. So I think, obviously tech is the way forward, and we'll see a lot of that in life insurance. But that being said, it's one of the hardest products to sell. It still remains an essentially push product, and hence that face-to-face interaction. So I guess what we'll start looking at is more hybrid models.
All right, so more hybrid models are the way to go forward to. Mr. Roy, I'll come to you next. I wanted to really understand from you, consumers' interest in insurance products has also really shot up during the COVID-19 outbreak. We've seen the kind of rise in the number of people really going for term insurance, health insurance. How can insurance really help alleviate one's financial anxiety? And how much of an insurance is adequate to give someone a peace of mind? Is something that I want you to please make our viewers understand.
So, Sakshi, before I answer that, just like to add on to what Supriya and Samit said on remote working and technology, just
Yeah,
a
yeah.
piece of statistics. Now, at PwC, we do this, CEO surveys. So, we did this in the middle of summer, right in the middle of COVID, globally. And 78% of all insurance CEOs believe that remote collaboration is here to stay.
Okay.
76% of CEOs also believe that this automation of things, continuously trying to automate some processes is an enduring change. 61% of CEOs believe that the low density workplace is what everyone will try to have now. No more, pack people in. And finally, an interesting thing, which is about talent, because this kind of automated remote working lets you harness a lot of talent which are not in your cities or in your country also, right? You can actually virtually employ anybody from anywhere and do work part-time. So 54% of CEOs globally, including India, including all the countries that we think of, believe that this shift to gig economy will again here to stay. So this is a very interesting thing, because this will change the kind of talent availability, behavior, and push. So this leads to your next question of how this increased sort of awareness of insurance can be converted to real taking of insurance. And Supriya told you, it still remains the very most difficult product to buy. Nobody buys an insurance and puts up a selfie with the agent saying, "Hey, here am I," right? So this is not a pleasurable buy. It's always a defensive buy. And So this is how the insurers have to take ride of the crest of this wave
Mm,
and use this particular awareness before it dies down, because it will die down.
mm,
So everything has a limit. Even the stock market goes down and it goes
right.
up, people forget it had ever gone down. Same thing happens here, that if a vaccine comes or we develop a herd immunity, people lose that bit of a connect of recency, and something new will come up. So
Yeah.
I think it's important that the entire industry, which it has been doing for some time, but sort of lifts it one notch above and continues to educate all, not customers, rather I'll say prospects, about the fact that insurance is a basic necessity.
Mm,
No country has been able to develop without a strong insurance base. No, I'll say middle class and below household can ever, systemically, go up without a lottery or with proper insurance, because insurance is all about preservation of the wealth they are trying to create and trying to leave behind.
mm,
It's not about creation of wealth. It's more about, creation of savings, long-term savings, the disciplined savings, and creation of and protection of your wealth so that your long-term
sure.
needs. There are three needs, right? Dying too young, and which is what you try to meet through a term insurance. Living too long, which you try to meet through long-term savings and pensions, and of impairment, which happens in your life due to illness. This is all about personal insurance. So these are the things that need to be focused upon, education done on. On the amount of insurance which you talked about, well, there are many thumb rules actually. Now they're on the market like 10 times income to 15 times income. Those actually are,
Yeah.
I'd say, outdated. As a country, a family has to look at its needs and aspirations. If it's, for
Mm,
example, education needs can be widely different from education in India and abroad. So family has to figure out its needs, go through a beautiful, comprehensive planning process to understand what are the needs which we fulfill with what category of financial instruments, and how
mm,
insurance plays a part in all and safeguarding
yeah.
their interest. That's the way one is to find it out. No other way is accurate.
Absolutely. Mr. Upadhyay, I'll come to you next, and I want you to add to what Mr. Roy has said in terms of how one really plans for their family when one goes ahead and chooses a plan. I also wanted to point out how an Accenture survey really has revealed that consumers are probably more fearful of the economic impact of COVID-19 than for their health. So, in this scenario, if you could expound upon which insurance products can really help them safeguard their family's finances and protect their health as well.
Sure. So thank you, Joydeep, for laying a beautiful foundation for me to sort of expand on. So fundamentally, I believe that the adequacy of insurance coverage needs to be seen from three axes, and like you said, the first axis is the responsibility, and each member of the family or in other words dependents is sort of a responsibility. So you have the responsibility, and there is a need for you to sort of segregate each responsibility and plan for it separately. Second is, when you're doing this on your dependent, you can't leave your own responsibility, as in the need for your own retirement income is a responsibility. The need for preservation of life style in case of an sort of an illness is again a responsibility that you owe to yourself. In this manner, you lay out carefully each responsibility. Then on the other axis, you look at risks, like you said, living too long, dying too early, or finally, or experiencing a contingency, so temporary breakage of income or livelihood, or a gap which prevents you from earning your livelihood, temporarily incapacitating you, or a disability creeping up, either it's COVID, due to COVID, or any other accident. So the second axis becomes the risks. So these are the risks. You have responsibility, and the final axis is resources. Mind you, if one has unlimited resources, then do you need insurance? No. The fact that we don't have enough resources today to manage in an event of a contingency is where insurance comes into play. So in that sense, resources also can help you plan whether you need to discharge this responsibility in sort of a regular premium, or a single premium, or somewhere in between, like a limited premium. So these are the three axes: responsibility, risks, and resources, in which you basically then you map out, and you, sort of, and ultimately when you sort of play this out, you'll see that the need for cover is effectively a bell-shaped curve, which on as your age increases, the need for cover rises, and then it sort of peaks, and then it starts coming down as in life you've discharged your responsibility. So that would be my advice.
Absolutely. So, Priya, I'll come to you next. Rightly pointed out by Mr. Upadhyay that, one needs to really map out what are the resources one has, what are the risks that could be there, and the responsibilities that one has to fulfill, and take all of that into consideration and then plan on. I also want you to really focus and tell us about what is the role of insurance so that all the viewers watching this panel discussion can benefit from it. Is it only about protection, or is it about protection plus wealth creation? Some of the wealth creation part Mr. Roy also addressed in his answer, but I would want you to expound upon that as well.
So I'm a firm believer that first, insurance is for protection. And of course, some of the ways that the life insurance products are structured, the endowment products, obviously have a wealth element in it. By and large, I'm a proponent that term insurance or pure protection should be bought separately, and the wealth creation part should be bought separately through other avenues of investments. Having said that, I think over the years, the life insurance industry has transformed and evolved a lot of hybrid products, which include a component of both investment as well as protection. Protection is an absolute necessity, and that's really what the primary focus and the objective of insurance is, to ensure that in case there is an eventuality or there is an unforeseen event like the pandemic or a health issue or any eventuality, the finances of the family and the dependents should not get affected. And it is basically the objective of insurance to put you in the same financial position, regardless of whether the event happened or not. So that is the primary objective. And that's where the term insurance works best. It's also the cheapest kind of cover. In addition to that, when you load it on with a wealth element, in India, traditionally, insurance was sold. The endowment products that were sold for primarily tax benefits also.
Yes.
And that's how the legacy has moved on. But in the last few years, with the advent of unit-linked plans that allow you to actually participate in both the debt as well as equity markets, you really can. And actually, this is where insurance, life insurance plans actually play a very positive role, because they force you into some kind of a longer term. Typically, they are 5, 10, 15-year, even whole life products, which force you into a regiment, if you will, and a discipline, if you will. And especially when you go into equity markets, if you stop timing the markets and you go into longer term plays, you will end up having great returns as well. And obviously, all the returns are tax free. So it makes very good value from the return that you actually make on your money. Plus, you're getting the insurance element in it. So to that extent, I think some of these plans are great. And because they give you the discipline, you're not tempted, every time the market goes up and down, you might want to switch funds. But at the same time, you've got a certain amount that you're putting in investment. And you know that, one, you're protected, your family is protected. And second, you are being able to create wealth. And there are so many flexibilities that are built into these plans that you can even make it work for you, like an annuity at after a certain maturity time, and it's tax effective as well. So I think with that, you get a lot of flexibility.
Right, Mr. Roy, you had a point to add. Please go ahead.
Yeah, so absolutely what Supriya said, this is the only disciplined long-term savings avenue. In the absence of social security, which is developing now, current now for the below poverty line, government is taking so many steps to give cover for both health and life and accident. But for the larger part of the last 70 years, India did not have any social security. So therefore, uh, the protection part as well as savings part became important because there's no other savings vehicle. India
Yeah.
lacks a complete pension infrastructure. We don't even have pension or superannuation as compulsory. We lack a US type 401k kind of a structure. We lack the Australian pension structure. And therefore, India needed life insurance to provide a long term savings, pension like savings, annuitizable savings vehicle. If you look at US and Australia as the examples I've taken, the insurance sold there is largely pure risk. And that is
Mm.
because people have an opportunity to invest in a systematic way, in a disciplined manner, in long-term vehicles which are meant for pension. So once uh, wherever India develops infrastructure like that, I think that insurance can become pure risk. But in between, people need a disciplined savings approach, if not for creating wealth, just to salt it away in a disciplined manner.
I'm sure. Mr. Roy, I did have a question which is related to what points you're making right now. So I'll go ahead and ask you that question in case you have some more points to add to that. Please do go ahead with that. I wanted to ask you for you to make us understand what is the real social impact of the entire insurance industry.
Yeah, so the insurance industry is probably the I'll say the funniest industry because it's the only industry which has a social remit, but it is the industry which has the largest trust deficit between the customer to the insurer, insurer to the
Mm.
distributor, insurer to the regulator. The trust deficits are amazingly big compared to the social importance. However, if you look at it in India, the insurance industry over the last 20 years after liberalization has resulted in creation of jobs for millions of people
Yes.
because it has grown as an industry. A new, fresh industry has grown. It has created livelihood for more than 2.2 million current agents. But let me tell you that more than 1.2 crore agents have been appointed in this 20 years. So many of them have moved away, but they have earned somewhere,
Yeah.
sometimes earned. So the question is that it provides a massive, like every other large industry, it provides livelihood and employment. And without employment, livelihood, the economy cannot grow. Economy grows by creating jobs and therefore creating the whole spending. Secondly, in the Indian insurance industry has been the largest proportion of claim payer anywhere in the world if you
Okay.
compare to any other country. No other country, I'm talking about the claims ratio. Let's say you take 100 rupees for risk premium and then you pay out how much. So Indian in the insurance industry in every category, not only life but non-life, but together, has been the largest claim payer. It is one of the cheapest risk insurance part today in the world. Risk insurance, pure term insurance in India in 2000 was not that cheap. But over a period of time, first with the non-smoker and then gradually going to online, that premiums have come down, and there's a razor thin margins left for the insurer. Uh,
Okay.
so that means that benefit has been given away to the consumer. And the third and the
Mm.
last, the investments that the insurance industry brings into the infrastructure of the country, because there's a lot of it is regulated that the insurance companies have to invest into the infrastructure segment, into social segments, and therefore it channelizes money from retail into investments into infrastructure, which is not easy even for the government to do. So therefore, the social impact of insurance industry, other than what you see on the surface, is very,
Mm.
very large.
Mm, great. Thanks a lot for explaining the entire contours of that as well. Mr. Upadhyay, I'll come to you next. I wanted to understand from you, how have life insurance products really evolved to give policyholders more control over their money at the time of crisis like COVID-19 that we are faced with?
Sure. So when the industry began before privatization, most products were what we call as traditional products, wherein policyholders do not actively manage the fund, as in the choice of the asset mix. Then with privatization and the India stock market story, the unit link products really picked up really well, and there was I mean, certain large companies had almost 90% of unit link mix, and that continued for some time till there were some changes in the regulation, etc. Now and since then, the industry has become more conscious of its the core purpose of its the core purpose, and since then, so the last few about 7-8 years or so has been about protection products. So different companies are on path of being a specialist on protection products, and which is the core need of the industry. Then, so as with anything, what we see now is a super specialization of sorts on protection. On one hand, which is like the a product that, I mean, a platform that we've created, which is like not only does protection but does protection on the linked platform. So
Yeah.
which is finding two sweethearts in one platform and giving the consumer, because typically the protection premiums are invested for about 30-40 years, and if you see the returns on a period of 30-40 years, not participating in the equity growth story is something which could lead to some post purchase dissonance. So
Mm.
that's why so this is on one hand the evolution of a super specialization. On the other hand, what the regulator is trying to do is create another platforms like simplified products like PMJJY, Pradhan Mantri Jeevan Jyoti Bima Yojana, or Saral Jeevan, the standardized product. So on one hand, we are sort of with respect to protection products becoming more and more specialist, and on the other hand becoming more and more mass as well. So there is a significant growth in terms of protection outreach for the country.
Absolutely. So, Priya, let me come to you next and let us dig deeper to understand, what are the advantages of a comprehensive life insurance plan with, say, longer cover, with life expectancy benefits as well. If you could just expound a little bit more on this so that all the viewers watching this, planning to go for a life insurance plan, can really make that decision now.
So a comprehensive insurance protection would give you typically a mix of, largely wealth creation or savings, long-term savings, and of course the basic protection from the term part of the cover.
Mm.
So like we discussed before, it instills a great amount of discipline and encourages long-term investments from the consumer's point of view, so that they can take care of their encumbrances as they were, whatever their aspirations are, whatever, like Joydeep and Samit both pointed out, what are your liabilities going forward, children's marriages, your own home, your second home, your holiday home. So whatever your aspirations, if you've planned that right, an all-inclusive plan can take care of all of that. Because these plans will give you flexibility if you want to plan money back at certain junctures of time, to take care of encumbrances at those points on your in your timeline. Also, things like whole life plans, which are great because they give you the term protection all the way up to 800. Over and above that, they also take care. So, like Joydeep said, the risk of living too long is also a large and predominant risk, particularly now with more and more nuclear families coming in. So you do need to take care of your post-retirement years, and structures like whole life plans are able to do that for you. Over and above that, a lot of new riders that are coming in, such as, I've seen the COVID-19 rider, which was great because it gives you a benefit, a certain amount of cash as soon as you're detected with COVID. And a lot of life insurers has actually made that available on their existing plans. So if you had a term cover, you could actually take a COVID rider to top it up at a very nominal cost. And in case you contracted COVID, you would get a certain amount as benefit, which would take care of then the expenses related to COVID, whether it was hospitalization or at home. So I think a lot of benefits that come through, and a lot of planning that you're able to take care of through a comprehensive life insurance.
Absolutely. Mr. Roy, I want you to, focus a little bit on how can really insurance products really complement other investment products in someone's portfolio. We've understood what are the advantages of a comprehensive plan. We've also understood the kind of innovations that are going around now, amid the pandemic, the kind of evolvement that we are seeing in the kind of traditional plans that we had so far, and the new additions that we are getting, especially the riders pointed out by Supriya as well. But how do they really complement with the investment plans that we have already?
So actually, it's like this. I spoke of the trust deficit earlier. Now, if there is another industry which has even lesser trust of the consumer, I think that's direct stock market investment, right? In India, because India is hardly retail invested into the stock market.
Hmm.
There are people, even mutual funds. It's largely a corporate market, and
Yeah.
it's very little in terms of value is really in individual investment. That's what gives also our stock markets a bit of choppiness, which
Hmm.
is because of the FII investments. So if you look at the whole
Right.
scenario, therefore, you see the our life plan, financial plan has many durations. Some are sort of short term, some are medium term, and some are long term, really long term.
Yeah.
And one does not have long term investment vehicles other than say bank FDs go until 5 years. Anything else you do other than equity, gold, or real estate, there are no open ended long term investments, and
Hmm.
that therefore one is planning with duration and money requirement in is duration wise or certainty, uncertainty, or wealth creation wise. People have to figure out what kind of instrument they want to use. So
Right.
a unit linked insurance plan, for example, serves very well also for a long term participation into the equity market by retail investors who are otherwise afraid to go to it directly or through mutual funds or through stockbrokers, because that way life insurers have a much more stable and a conservative image. Secondly, and by the way, life insurers can also invest more long term because they don't have the redemption pressure. Secondly, if so as a portfolio, if one is looking at very certain short term money requirements, one obviously has to go for those bank FDs kind of thing. Then whatever wealth people are accumulating through many other means, either from unearned income or from the other investments, to protect them, one needs to take protection insurance, which is term insurance, accident insurance, and all of those critical health ones for which might impair oneself and may somebody may lose their whole profession. So therefore, the
Hmm.
ability to keep on paying premiums may be an issue. So as far as riders are concerned, well, riders perform very different uses, but a waiver of premium rider for any kind of a long term policy, especially for somebody else like a children taking that, is very important.
Yeah.
Other things people
Right.
normally don't think of is looking at the legal terminology for insurance. So, for example, if one is taking a term product and is making a lady, either the wife or daughter as the nominee, then taking it under Married Women's Properties Act is a unique advantage Indians have, because then the
Okay.
proceeds can never be attached by any court ever, or can never be taken away by somebody or relative or anyone under any circumstances. So these law which dates back to 1890s, but is still
Hmm.
valid today for life insurance. When one is
Hmm.
taking term insurance and
Hmm.
making the beneficiary as a lady, either a
Okay.
kid or a woman. So these are the kind of planning one has to do. Financial planning has many aspects: the fund aspect, need aspect, and the legal protection aspect. So I just give you glimpses there. I can keep on talking about this for maybe a whole program, but one needs to think of these and then complement every bit of accumulation of wealth with the protection
Yeah.
of wealth and protection of one's goals. And to do that, insurance will come in everywhere. And as Samit said, the very wealthy do not need insurance. They've already achieved that financial stability,
Right.
maybe
Right.
generations, but they might still need different kind of insurances to protect themselves. And that will take us away from the topic of life insurance, but there are many generally non-life insurance that need to take to protect themselves against losing all that wealth. So that's for probably another day.
Right. Mr. Upadhyay, would you also like to add to the importance of riders that Mr. Roy has talked about before that? Even Supriya mentioned about the importance of the kind of riders that are existing and the kind, awareness that everybody needs to have about all of this as well.
Yeah, sure. So there are. I'll go slightly more micro on the importance of riders.
Sure.
And if you see in the industry, persistency, which is the basically the fact that someone takes the first premium, buys the policy for the first time, and pays the second premium. So persists in the policy. Persistency is positively correlated with the size of the size of the premium. So very small ticket size have poor persistency. With poor persistency comes consumer dissonance and sort of the adverse name for the industry. So historically, a lot of health covers I mean, typically the size is small, so the ticket size, the premium size is small. When sold independently, had very poor persistency, and as a result of that, sort of they didn't. I mean, we didn't had a lot of satisfied customers. So rider, the benefit of rider is that it aggregates those small packages into and builds it on the chassis of the base plan. So it's like a component over the base plan that gives you a very different kind of a diverse protects a very diverse need, but also aggregates your policy so that it's simpler to keep track of it, manage it, and make sure that you don't forget to pay on it, or more importantly, make sure that you don't forget to claim on it.
Right.
So that is the biggest advantage of having a rider, or covering to a rider. Other advantages are in terms of pure technical aspects, is that if you have a cover and if you sort of buy another cover, maybe base plan and rider is sort of more efficient than two insurance plans
Yeah.
that you could buy differently. So in terms of pricing also, it would be slightly more efficient. And yeah, I mean, there are, I could go on, but yeah, those are the broad themes. And then the biggest aspect of riders is the sort of flexibility of adding on a layer when basically based on the need. So let's say I take a plan with a value of X based on my responsibility that I can see now. Tomorrow I get married. Okay, I need another layer of protection, so I add another layer. If I have children, responsibility grows, I add another layer. Maybe there is a concern about my health, I add a third layer. So I mean, it basically can be built up and made a very comprehensive sort of package of sorts, rather than having different plans and looking for different opportunities with different sort of places.
Right, absolutely. So, Priya, would you like to talk a little bit about the kind of new innovations that you're seeing happening in the post-pandemic India in terms of the insurance plans?
Yeah, so like I said, the industry really came up in terms of, term life and all of life insurance does cover COVID. And that was one large anxiety that all existing insured had. But over and above that, I think the industry has come up with a lot, both in terms of enablement, like we said, for the entire pre-sales and post-sales process, particularly when it comes to claims, when it comes to policy delivery. So both regulator as well as the industry, I think there's being a very quick shift because it was important for survival for everyone in terms of digitization, whether it was right at the time of policy issuance. So we were seeing a little bit of that at each stage of the operational process. But now what we're seeing is, everyone is embracing digitization at each step of the process, particularly on the side, particularly on the servicing side, the issuance side, and that will only grow.
Hmm.
even in terms of innovation, to be able to address the anxieties of the population with respect to the pandemic, which was an omnipresent anxiety for everyone. I think the industry has really come through, and we'll see a lot more of that. Very quick product launches, widespread use, widespread distribution, despite the fact that we were in complete lockdown in the initial stages.
Hmm.
And we'll see a lot more of that embracing of technology, and we look forward to that.
Absolutely. So, on the embracing of technology front, Mr. Upadhyay, if you could just detail a little bit about as to how are you witnessing the Indian insurance industry becoming digitally mature, and do you think they've managed the COVID-19 pandemic, and in this pandemic they've managed to sell and service remotely quite well, or is there much to do on that space?
Oh, absolutely. And some companies have done this better than others, but almost all companies have done a very good job as far as us. Almost in excess of 98 odd percentage of sales happen on digital platforms. Not only the sales, but in terms of even the service post sales, in excess of 85 odd percentage are sort of self-service cases. So we see both at inception as well as servicing a huge digital adoption with respect to our consumers.
Absolutely. Mr. Roy, I'll come to you next, and I really wanted you to, tell us about as to why do you think the penetration of insurance is still so low in India, despite so much of liberalization. We've seen the kind of digitization and the digital adoption in the last 8 months of the pandemic, so that everyone can be reached remotely as well. What is the key reason?
So, Sakshi, I'm going to say something quite contrary to this. So, but before I say that,
Hmm.
I must say that yes, penetration is low. There is a protection gap. A lot of people are not covered for life and health and other personal insurances. A lot of people who are covered are inadequately covered. So that fact remains that there's a long way to go, which is a great news for the industry as far as growth is concerned. It's not
Hmm.
good news for the people, especially as you see sometimes floods happen, earthquakes happen, and many of those lives are not insured, or not even the properties are insured. So yes, India is still way down in insurance protection. However,
Hmm.
sometimes we miss the woods for the trees. In the last 20 years, the progress made is amazing. We don't see it because the per capita premium in India for life taken is low. See, on purchasing power parity, India is almost 20x different than US. So when we look at
Right.
percentage of GDP, see, our GDP contains a lot of dollar GDP, lot of the export income, and and measured in dollar terms. But if you take purchasing power parity, for an Indian to have, let's say, 5 or 10 lakhs, or even let's say 20, 30 lakhs of life cover,
Yeah.
averaging the Bharatiya, not Indian, if you have to make the distinction, is fantastic, which is not there. But with the kind of spread of the PM schemes, the Ayushman Bharat, and the whole effort by the private sector life insurance industry and LIC all put together, the protection has gone up. The sum insured in India has gone up in the last 20 years by a factor of more than 30.
Right.
What we see continuously keep seeing is the premium, which has kept coming down. As I told you earlier, that the premium for the same cover, if it was 100 earlier, now it is 30. So if you just keep measuring premium on a GDP which is growing, then it'll look bad. But that's a great thing in the sense that the premium has been made more affordable, and more people are getting covered and their risks are getting covered. It's still not adequate, but where it was 20 years ago, it has grown further. So therefore, the only last thing I'd mention, you asked the question of why is it low? Well, it was very low. It is low now. Now, the remedy of this, of course, are a bit of legislation and tax.
Hmm.
Organically growing will only reach to a certain place, but there needs to be
Okay.
some kind of legislation on mandatoriness of pension, mandatoriness of long-term cover, and loan
Hmm.
covers, without which we will not make that leap.
Absolutely. Samit, would you like to add to that as well?
Sure. If you so Joydeep that is right when he points out that despite the cover, the sum assured levels increasing, the premium has sort of not increased, and there are multiple reasons. And one is definitely the fact that earlier premiums were sort of a blend between savings and protection. Now they are more protection than they were earlier, and so on and so forth. So there are more dimensions to it. But more importantly, there are independent studies that have basically show that almost 80% of the protection gap in India is sort of unfilled, and this is very close to what it is in China and perhaps lower in developed countries. So this is like the this is the case because of awareness. Simply, I mean, awareness about insurance, awareness about adequacy of insurance. So even if you ask a lot of us from who not only people who are I mean, even in people working in insurance companies, you will ask them what is the adequate cover. It's sort of, it needs more careful planning, and historically we've not got consumers to get onto the planning because of the engagement, the model that we have. Traditionally insurance is sort of a boring, and Joydeep also mentioned this. It's sort of not so exciting conversation to have. Okay, the only engagement that we have with our customer is, okay, pay your premium, pay your premium, pay your premium, submit your claim. I mean, that's a very uninteresting. So this is where AIA has done interesting things. Our shareholder, and sort of we are in the midst of getting some of those practices in India, and basically we trying to move from a partner, from historically to a payer. So we basically partner with the consumers in their life, so that we have a common, and if you see, there is a common skin in the game. If there are less claims, both the consumer benefits as well as the insurance company benefits. So we are going to, over a period of time, come up with a lot of positive engagement, which basically helps consumers to live a healthy, longer and better lives, and sort of instead of just checking on them for their premiums and then settling claims. And one of the recent platforms that we've launched is Medix, and basically it's like a personalized case management service, wherein which enables you access to a host of one of the best doctors in the world, and even in developed countries we've seen that there were quite a few developed countries where medics has been able to change the diagnosis, and a equally high number of cases where they were able to sort of change the prescribed treatment. So the misdiagnosis and mistreatment problem, and helping consumers live longer, healthier, better, is our mission. And hopefully with better engagement, better awareness, we'll be able to, next time when we are on this show, we'll be able to show you a better penetration as an industry.
Absolutely. Supriya, last comment from you, and then we'll wrap up this show. Quickly, in 30 seconds, if you could explain to us what are the ways you think penetration of insurance can be enhanced in the country?
So yes, I think digital will become key, and it already is beginning to show. Because obviously, with the diversity in terms of geography, in terms of purchasing power, we do have unique challenges, and hence digital distribution will add a lot. Going into tier three, tier four towns, I think technology will be the biggest disruptor, and also like Joydeep said, legislation as well as regulation is going to play a huge part. in terms of making it mandatory, particularly when it comes to retirement plans, because in the hierarchy of needs, when people are looking at roti, kapra, and makan, insurance needs to fit in, and the government is doing its bit in terms of Ayushman today is one of the largest running schemes in the world, but we'll see a lot more of that. And yes, so we look forward to a lot of development and growth ahead. Thank you.
Absolutely. All right, we'll wrap it up on this note. And just like how wearing a mask, maintaining hygiene, and social distancing are perhaps the best defenses against COVID-19, evaluating your financial needs and buying the right add ons, riders, taking a comprehensive coverage is also essential to protect yourself and your family during unforeseen circumstances. Of course, points made by Joydeep Roy, Samit Upadhyay, and Supriya Rathi are well taken. And we really hope that the government really thinks about bringing a legislation, making it mandatory so that everybody in the country can be well insured, adequately insured going forward from here. Thank you very much, panelists, for sharing your deep insights with us. Appreciate you all taking our time for this and hope our viewers really got some valuable inputs on the insurance front to help them make better decisions for themselves and for their loved ones as well. So please do share with us what you thought about this discussion in the comments below. Many thanks for tuning in.